Good evening, ladies and gentlemen. This is Clueless Trading Frank. The recording is on. Yeah, so I was just talking to Trent, and we were talking about CES, the Consumer Electronics Show, and it's such a mild name for such a powerful forum out in Vegas that happens once a year. And I'll tell you, it's just incredible. And Trent, our great member, was there, and the perspective it draws on you makes your trading, your investing a lot more better because you see what's going on. You know, it's just incredible. So let me just start the recording. This is going to be a quick intro session. I'm going to go walk through the charts and stuff. I have the ACS session set up for 8 p.m. So if hopefully if people show up, I know it's a long weekend. People are tired, all that good stuff. If we don't have enough attendees, then we'll certainly do it tomorrow, like we normally do, Monday evening. But let's kick off with this. Good evening, ladies and gentlemen. We have two great people, Mike and Trent TL, here in attendance tonight. It's the 15th. It's half the month. Wow. 15th of January 2018, approximately 6:34 p.m. Eastern Standard Time. Starting to get cold again here, dropping not to like -10, but getting out there. This session will be recorded, uploaded to the YouTube Clueless 8 Trading YouTube channel. Keep in mind that channel for all the free videos is open to the wide world. So if you have friends, referrals, anybody who wants to know a little bit about what we do, why we do, and what we get out of it, the massive performance that we get out of our trades and our investments, then feel free to refer them to the Clueless 8 Trading channel. Full disclosure, this is purely for financial education and not for any solicitation or advice. There is never advice. It is only suggestions. Keep in mind. And people should be fully aware of that. The only advice that should come from your own head and your own brain. On that note, we shall begin, and let's keep this short and sweet and straight to the point. So first and foremost, this is an introduction to basic chart reading, which is the essence of the Clueless 8 Trading Service, and the exact title, as I put it out there, was Intro to Tactical Chart Reading and Trade Analysis, which ties in together. Obviously, if you're reading the charts well, then your trade analysis and how you're going to handle that trade is going to be better. Remember, in every single trading service, there are alerts. They put out their alerts, what they think is going to go higher, what's going to go lower, all kinds of good stuff. The difference between all the other trading services, and I will say that with a huge amount of confidence, between all other trading services that's out there and at Clueless 8 Trading, is that with every single alert, almost every single alert, there is a visual chart in front of you. And that chart, in this particular case, is a SPY. I'm going to cover the overall market first, and then we're going to go into one or two other stock charts. Is that you have a visual representation of what's going to happen, what might happen, what are your probabilities that it might happen. In other words, the odds, right? So odds of where your trade will go and whether you're going to make money in it or not. The second, so that's a huge benefit. You're not just blindly just buying an alert because it's a one-line thing saying buy it, okay, or a suggestion saying buy it. So that's number one. Number two, the markets are volatile. 2018, I want to repeat, and I'm going to repeat over and over and over again. Just like our great President Donald Trump, just like any other great leader. You have to repeat things that you believe in. Okay? Right or wrong. At Clueless 8 Trading, we're mostly right. So, is that 2018 is the year of the tactical trader, is the year of charts. Period. That's it. There's no question about it. All right. This 2018, and they're saying it in a direct, tough New York City trader way. Some people might find it harsh. I don't care. That's the way it is. 2018 is the death, is the demise, is the demolition of the emotional trader. If you're just following prices, not understanding these tactical charts that are being put in front of you, I can assure you, you can have the best entry. You can have the best entry. Okay? You can have the best entry, but you will screw up on your exits. You will screw up on your exits because the markets are volatile. This is a 1 hour chart. The daily charts are more straight line because as you zoom into 1 hour, 15 minutes, 30 minutes, 5 minutes, and you keep on zooming in, they get choppier and choppier. Why? Because as you zoom in, I'm sure many of you have looked through a microscope back in high school or in college or whatever, or just go buy a microscope from Amazon and look through it. When you look at an object, it looks symmetrical. Either it's roundish, it's squarish, it's got some sort of shape. But as you zoom in really deep, and it's the same thing with our body. When you zoom into our body and you look at the cells, in between that cell is the mitochondria. I'm trying to think of my biology days. I was actually a pre-med major before I turned into business. The mitochondria, there's all kinds of cells moving. There's lots of movement. That's volatility. But as you zoom out and you look at the picture, then there's smoothness to it. There's a symmetry to it. There's a shape to it. There's a structure to it. Now, this is not just for not giving you a lecture on shape and structure. I'm giving you that shape and structure can make you a lot of money, or at least save you a lot of money. So I just want to make that point clear. So 2018, I repeat, and I'm going to write that down right here. 2018. Remember, 2018 ends with 8. It's going to be your best year. Only if you focus, if you take that extra effort between looking at the trade alerts, acting on them, more importantly, understanding them before you act on them, because the only advice that comes is from your own head. Mine are just suggestions. I look at high probability trades and I know how to manage my trades. Trade management is difficult business. I understand that. It's difficult for me because of volatility. So 2018 is the year of the tactical trader and investor. Yeah, a trader and investor. Of course, as a trader, you're carrying more risk because you're trading, especially if you're trading with options, carries more risk. A couple of days might be running out. You're reaching your expiration date, all kinds of stuff. So obviously, there's a heck of a lot more volatility, heck of a lot more risk, and more importantly, heck of a lot more rewards. So, as an investor, if you're buying common stock, for example, or long-dated options, with the common stock, you still have to rely on tactical charts. Just want to remind everyone on that. That's all. Don't want to harp on it. So tonight, what I'm going to try to do, and this is really an introductory session. So a lot of our new members or people who are not really, still not focusing on tactical trading, still trying to be an analyst, what I call an analyst. Excuse my French. Okay. And I come from the background of Wall Street, 14 years. All right. I've seen enough of smart people doing dumb things. Read the article that I put out there, about the psychology of that and why it happens. The fact is that this intro session hopefully will help them. Okay. So saying all that, let's kick off. And refresher courses like this, introductory webinars like this, are very important to all of us. Now, I'm creating the content so I understand exactly what's going on in front of me. But there are seasoned traders who have done very well with Crusade trading who still need refresher courses. So that's the purpose of this particular one. So what you're seeing behind you right now is one of the platforms that I use, which is one of the best and most advanced platforms known as Quodd, Quodd. Anyone who wants to subscribe to it and do their free trial, I have no financial relationship with Quodd. I've been using them for 12 years, 10, I know at least 10 plus years. And I have found them to be hugely beneficial to my trading. And I use that one particular platform quite a bit. I use Thinkorswim, I use investing.com, I use stock charts. I use primarily 4 different platforms. And all of you must have one platform, at least on the chart side. Doesn't matter where you're putting your trade through. And in Quad, which they use bar chart as their format, you cannot put your trades through. This is primarily for all, it's a very wide platform where you can get lots of news, lots of this or that. Primarily, I use it for my charting and for displaying my code screen. Very easy on the eye. Everything is side by side, and it's very easy for me to see exactly where my positions are and what's going on. So on the quad chart, first and foremost, and by the way, just a quick reminder, I have a whole quad webinar that's on my YouTube channel, done months ago for the benefit of my members. And those are, that's under quad chart structure or something like that. And feel free to, what I call algo HFT, because for whatever reason, they don't tell me, but they seem to pick up movements in the market split second, which is extremely important for active traders, specifically for all kinds of traders, but more importantly for active traders and for people who are trading the indices like SPX, SPY, RUT, IWM, QQQ type of options. So what I do is I look at a basic quad chart, which is these candles that you're looking at, and then I structure it. And my structures are what have proven to be right, I would say a good 80-90% of the time, both on the short and long-term basis. On the long-term basis, I've been right, and I will say this with full confidence, 100%. I said the market was going to go significantly higher. I didn't think the market was going to approach 2,800, which is going to open at tomorrow morning or close to it, with futures up about 5 to 6 points right now, the Globex futures. I did say the market was going to go to 2,600, 2,700. I'm going to say the market's going to go to 2,800. I put out a fantastic Thinkorswim chart that I'm going to show tonight that's on the Twitter feed, which shows the weekly and where the market might have a substantial top. And remember, these are not my opinions. I'm looking at actual, this is the one that I'm talking about. Okay, I'm looking at actual lines and structures that I put over it. So what I do is I look at the naked candle chart, which basically to most people can mean nothing. It's a candle. It might go down, it might go up, but then I structure it. What's the bottom line? Where are the gaps? I look at the internals. In the simplest internals that I use are the stochastics. I use 30 different indicators. I only show a few. Why? Because I want to keep it simple. It's the KISS principle. Keep it simple, stupid. Because after all, the difference between a genius and a clueless trader is that the clueless trader has a significant upside. A genius is already up there. And I ain't a genius. I'll tell you that. Because if I was a genius, then I would have no hunger. And I'm very hungry to reach peak performance, which I am not at all close to it. All right? And many of you are not even forget about peak performance. You're not even close to performance. So it's time to wake up. Okay? 2018, year of the tactical trader. So before I keep on ranting, so I draw the structure over it. In this particular case, the way you read this chart is you look at the channel. That's your wide channel. So if you're in a swing trade, you're focusing on the channel. Okay, this is where the markets can vacillate in, and this channel basically actually goes higher. And in the particular case of the SPY, it crosses over 2,800. But this is, I'm just showing you more of a short-term picture. So first thing you notice is this 2 white lines. This is the channel. The second thing that you notice is these dotted lines. This dotted line is always, which I put in yellow, is the pivot. I'm going to put P. What is the pivot? the exact definition of the pivot, like I've always said, go to Investopedia and look up pivot. To me, as a simple guy who tries to look at life in a simple basis, life is very complex, but I like to look at it simple and try to work through it, whatever obstacles come my way. Fight it, win it, and keep on going at it. Never giving up. Never giving up. Never give up, okay? So the point is that the pivot is where either it bounces from or it falls. And it doesn't mean it's going to fall all the way down, but I also draw which I'm going to get into next, the different lines of where the supports are. Now, if you want to get into the real nitty gritty of it, the very advanced stuff where what the correlations are, I'm going to give you the basics right now. Then feel free to sign up for the advanced coaching sessions. That's my only marketing pitch on my service, okay? So make me rich, the ACS. What makes me pay my bills is and feel good about what I'm doing is my own trading book, not the service, not the ACS coaching sessions. In fact, I don't even want to do the ACS coaching sessions because I'm pretty lazy. But I do it because it helps my members. The only little cost that's associated with it, instead of paying thousands of bucks for a trading course, you're paying like 45 bucks or 50 bucks a session. You take the 5-pack session. It's simply that you guys understand what I'm putting across better, and hopefully you will join the party. So the pivot. So the nitty gritty of it, remember, you want to learn the deep into it, then sign up for the ACS. And people who have done that, they put their own feedback, their own testimonials out there on the website. Read them, talk to them directly on the direct message in the chat room, and they'll tell you how much they benefited from it. So saying all that, the pivot is basically the sort of, the pivot, or the pivot at which it jumps from or it falls. So that's the first thing you look at, in my opinion. You look at the overall structure, which is the channel, the red lines. This is a downtrend channel, which is known as a consolidation channel. And I call it right. Like even when it's coming down like that, like last week, and I said the market's going to bounce. I'm not just saying it because I think it's going to bounce, because I have no idea it's going to bounce. Yes, I have a great idea about what's happening globally. There is no signs of a massive crash. There is no credit crisis going on out there unless China screws up big time with their shadow banking stuff. I'll explain all that on ACS. Okay, and there is a possibility of that this year, by the way. There is no mortgage crisis going on in the US. Retail spending is strong. Business policies are very business friendly, thanks to the new presidential team and President Trump. So all that is fine. But I do it because I'm looking at multiple factors here, which I'm going to walk you guys through. So you look at the uptrending channel, which are always updated. So it's not like it just started all the way down here and the same lines going on and on. I don't keep it stale. I keep it fresh. So I drew it from this level here, where the last gap was at the end of the year. Remember, this was a sell-off on the 29th. I called it right. And I also said that the market was going to bounce within 24 to 48 hours. Go listen to my video cast. Look at my charts from the end of the year. And the last day of 2017 was 29th of December. And boy, oh boy, did it do that. This is where we started our journey in 2018. I believe it was a Tuesday. And this is where we are right now. That's called precision predictive analytics. And all in this one chart, it actually shows why I came to that conclusion. Of course, I look at many other different things. So you look at the channels, you look at the downtrend consolidation channel, you look at this type of line, which is a downtrend line. The reason I drew that is because once it breaks out of that, that means it's broken above, breakout over the downtrend line. So you look at all these big lines first, okay? Then you start focusing on the horizontal lines. The horizontal line, this is the pivot. The pivot breaks above pivot, it's going to move higher. Breaks below pivot, it's going to move lower. How much can it move lower? I have a red line here drawn. The red line, and believe me, the markets follow a significant amount of the times. I would say a good 80 to 90% of my time. You guys know it. People who are focused, people who are looking at my charts know that those lines are exactly engaged and things either bounce from there or they fall. Isn't it amazing? It's called technical tactical magic. Now, aside from the magic, it's putting a lot of money in a lot of people's pockets. If you just look at prices, you have no idea what the heck's going on. If you look at this and then you look at the prices, then you have an idea what's going on and you are making money. Or you are taking evasive measures like dollar cost averaging, buying something at 4 here, buying something the same thing at 2 here, and then selling it at 3. And then as it zooms forward, you're selling it at 6, or buying something here at 4, adding more at 3, selling it all the way up here at 12. What are kind of percentages of this? From 3 to 12 is a good solid 300% profits. 400% on the move, 300% in profits. I mean, this is actually much more than 300% profits, but I'm just keeping it simple. So that's what these charts are helping you to do. If you're just looking at prices, you do the dumbest things. You're selling out right here. You're not buying here, as I alerted, as I showed on my charts. You're chasing. Maybe you buy here because you're feeling good. Feeling good is like the worst thing you can ever do in the stock market. I'm always watching, behind my back to see where I'm coming from, where I'm going. I'm always on a positive stress alert. Always. Futures are up 5. So what? We could open down 15 tomorrow morning. And we will still make money, which we have done repeatedly. Because we will buy the tactical lows and we will sell along the way, whether it be during the day or whether it be on a 3-day period. It's happened over and over again. So stop frigging just watching prices and making, silly comments in your head. And I know some of you don't make too many comments about that stuff because, I always come back and correct you guys. So maybe some of you are scared of me, which is fine with me because nobody else is scared of me in life. So basically, that's the way it goes. All right. So then you look to see where you can fall. You have the red line here. You also have these lines which are automatically generated by quad. So you have, these are resistance. This is R3. There's always 3 lines up, 3 lines down. And the middle line, which I highlight in yellow, is basically the yellow line here, which is the pivot. Okay? So if you want to look at support here, you notice that there is, aside from my own structured red line or support, S3, because this is the third one, drawn, you will notice that right here is another red line. And that's why I highly encourage everybody to get quad. Try it out. If it doesn't make a material difference to your trading, and in other words, in simple English, put more money in your pocket, then tell them that you don't want to subscribe to it after the free trial. It's only $120 a month, and trust me, for real traders, it's going to give you thousands back. That's my opinion. So bottom line is that what happens is with people who are just watching prices, they'll be looking at something like this, okay, and they will freak out and they will sell exactly here, right there, because there's a big red candle. I haven't gotten internals yet because those are a major factor of deciding whether to pile in or not. So right there, they're going to sell. They're looking at this red line here. They're like, that's it, I'm out. I can't take the pain, blah, blah, blah. All kinds of stupid stuff. Guess what the market does? Exactly at that level, at that support level, which is pretty much S3, which is around 272.80, 272.83 on the SPYs. And by the way, this has a direct correlation to your actual trades that you are doing in the front side with individual stocks. Because when the market is down, let's say 5 handles on the S&P 500 or $1 on the SPYs, you're seeing a heavy downdraft. Standard mechanical robotic selling. And that's going to affect your stocks. I don't care what stocks it is. Yeah, some stocks are going to be green and this and that. Weight Watchers, who the heck cares what the market's doing, right? But bottom line is that's been a big winner, swing winner, still going. But high momentum stocks, whether it be Google, Apple, Goldman Sachs, that type of stock, and even some of the bigger biotech, big cap stocks, they're all going to fall because the S&P's falling because it's a standard big time institutional sell program in effect. So you guys are going to all sell here. Not you guys all, but most of you who are just price watching monkeys. Now, why do I say monkeys? Monkeys is MOHTR. Monkeys on a hot tin roof. Monkeys just flipping around, jumping like crazy. That's why it's called MOHTR. So you're going to sell right there. In the meantime, as a tactical trader, Clueless 8 Trading is going to issue alerts right at that point, at that support. Maximum, it's going to, with the probability, as you can see right in front of you, that if we did break that S3, that we would fall right here in this shaded line, which is a gap fill. Gap fills are huge buying opportunities, and gap fills higher are great selling opportunities. Case in point, AutoZone. From 492, that baby is almost at 800. Couple of months, not years. And in the case of AutoZone, and in many of my other stocks, it was a gap fill play, and many other things going on. Same thing with Ulta Beauty, which we haven't been trading lately because we have played that gap fill. We played Apple on the upper gap and the lower gap. Lower gaps, generally speaking, unless the market conditions are totally changing, and that's my job to alert you if market conditions are totally changing. I am a master of reading market sentiment and overall picture. So unless that's totally breaking down, you got to buy these tactical pullbacks. So this gap fill would be a fantastic buying opportunity because that's what gaps do. There's a reason behind it. Want to find out about it? Sign up for the advanced coaching sessions, ACS. There is a psychological and technical reasons why gaps are filled. So if it slips here, you don't freak out and say, oh boy, I just bought this and it looks like it was support and boom, it slipped down here. It didn't. But there's a possibility. So you add more here. In this particular real life case, the market came down 10th. 10th was, what day was the 10th? The 10th was Wednesday. Big sell program on Wednesday, continuous sell program. That's why it's a red candle. Which reminds me, fantastic small video. I didn't do it. Found it on Pinterest. And I put it out there on candlestick dynamics. What all these candlesticks mean. Not that hard. A green candle is good. A red candle is bad. But the different patterns, you have to get to know them. So please go review that video. It's there on my Clueless 8 Trading channel. On the playlist should be new member introductory video. So anyway, the right there would be a fantastic buying opportunity. Guess what the market does? It creeps higher. Along the way, it tests that support again. Fantastic. We all know that if that support broke and this channel support broke, we know where the big buying opportunity would be, which is this gap, which was created on the 4th. Right there. And that's why I've drawn this. So the way you read it, you start with the big channels, downtrend lines. This lower channel is like an uptrend line, right? It's an uptrend line, not like. It is a real uptrend line right there for now. So the consolidation channel, notice, coincides directly with the uptrend line and S3, which is the support right here. This is not rocket science, guys. Even kids can understand this, or half intelligent kids, all right? The ones who are not like smoking pot and sitting there playing Nintendo. Nothing against it, but anyway, I'm pretty old-fashioned that way. So bottom line is that that you got so you know what's going on here. So this is a major buy point again, and another pattern will develop when it falls here. I'm not going to get into patterns tonight. So bottom line is that you look at that S3, you look at the gap, you know that if things really slip and things go nutty, then those are the levels that the machines are going to start buying, which is a combination of short covering and real buying. But don't expect it to happen. There's no 100% guarantee it's going to happen. That's why we track charts on a real-time basis. Because if we waited around for this, then we would have completely missed this move, which was good for about 110% on your SPX calls. 110%, guys, all right? Not 1%, not 11%, 110%. So you look at the support lines, you look at the gap. The dotted line here is not a pivot. The pivot is always in yellow. The dotted line comes from somewhere back there. The dotted red line is actually the upper end of this gap fill. This minor gap right there. So the dotted line is that upper end of that gap fill. That's 272. This is how one of the ways I put exact precision R1, R2, S1, S2. I say max upside sometimes, how much the market can move higher. And boy, oh boy, it actually gets there. Or go lower, it gets there. It's easy to read. Now you can see. Max upside on this, for example, this third green line is R3. What is R3? Resistance 3. Which also coincides with the upper end of the channel, which is 276.34. Many of you like to trade the SPYs. I like to trade the SPX. It's fine. Trade the SPY. It's cheaper, and it's great. So bottom line is, the market will basically, on a big push higher, it's going to find major resistance here. So what do? You buy here? No, you sell here. And you wait to see the reaction of the market at that level. And then if it breaks out again, which it had done a lot, then you can join, you can re-enter. You can re-enter. There are no absolute exit and entry points. You start off the journey here at A. And you end the journey, let's say, at 1 second. You start at point A. And the journey ends, let's say, for example, at Z. Guess what? It hit exactly the upper end of the channel. That channel was drawn on the 8th because these two lines were, in technical analysis, you always have to have reference points. I can't just randomly draw these lines. I have to have symmetry. There's mathematical symmetry. All is big money in your pockets, guys and girls. Okay. So bottom line is that it hits here, sell program comes in. You can find all kinds of news. Oh, the market sold off because the Chinese decided they're going to basically control, stop buying U.S. treasuries, and the market got all scared, blah, blah, blah. Then the next day, the Chinese official comes up and says, no, we don't intend to do that because the Chinese are our biggest debt holders, right? They buy lots of treasury bonds. So that was one of the fears in the market. Bond yields were shooting up because treasury prices were falling. It hit stocks, all kinds of stuff. So there's always a reason behind it. But the reason will always, like they say, technicals precede fundamentals. So the fundamental reason will always come after the fact. And if you follow my real-time Twitter feed, I put the reasons along the way as it goes, so you guys have some understanding of why things are happening before they're happening. So, saying all that, you got saying all that, you know what the levels are: pivot, supports, resistance. I haven't drawn that line here, but you can. I'm going to put one in there. So 275, whatever, and the pattern basically at that point. Even if the markets pull back, let's say the markets pull back tomorrow, that's one support again. Either it's going to bounce from here or it's going to fall into the gap and bounce from here. If it falls off this gap, then you look below. What are all these lines? This is the breakout level. See? This is where the market again had a consolidation channel, exactly similar to this. Let me clean out the picture. That was back at the end of the month, end of last year, 29th to be exact. So instead of listening to the retail BS bullcrap that's out there and your own opinions, look at these charts. How similar is this? This was your consolidation channel. This is another consolidation channel. Then the markets broke out. The markets broke out beginning of the year on January. What was the first day of trading? January 2nd. Okay, January 2nd. January 3rd, the market broke out, and that's the breakout level. Normally, I would have a caption here saying breakout level, but hey, I do enough. So sometimes you guys got to know a little bit, understand that even if I don't write it, you should be able to see it. So that's your breakout level. Then the markets broke out and they continue forward. Now, saying all that, if we have a flash crash, a big one, then we can basically drop a good solid 200 to 300 points. That's what it is from where we are right now, and test that breakout level again. Is that the end of the world? No, it's another tactical buying opportunity. It doesn't mean the market's going to make another new high. It simply means that within that day, within the same day, or within the next 24 to 48 hours, you are going to generate a significant amount of profits. Whether it be 60%, 80%, 100, 150%, 200%, 250%, I don't care. You will get a good portion of that. This is your breakout level. And this is coming, telling you. This is coming. So, quick refresher on the externals. Remember, the chart is the external. I'm going to put EXT. And the underlying indicators are the internals. I'm going to put INT. Charts are basically manifestation of prices moving up and down. The internals are giving you a clue, quote unquote, an indicator, the canary in the coal mine, whether or not, there is danger ahead, or the early buy signal before the media, you guys, your buddies, all other trading forums out there get into the game. We are always a little early at Clueless Aid Trading. And that is a significant benefit, because while the masses rush in and the lemmings start buying, you can generously, happily, profitably sell to them on the profits that you have made because you were a little bit early. So how do we detect the early warning signals? This is your externals, the support lines, the resistance lines, the pivot, very important, the structure, the channels, the downtrend line, that's a downtrend line. I even put markers to guide you along the way. Can't get any easier than that, guys, seriously. So now we are going to talk about the internals. On the Algo HFT charts, of course on Thinkorswim too, the internals are very important. The easiest way for anybody to do is to look at oversold and overbought conditions. Kramer sometimes talks about overbought and oversold conditions. He goes, oh, yeah, technical geniuses use this all the time. But in that case, we must be like Einstein, because we use it to perfection, not just stochastics. We use other indicators too. Darvas boxes, vortex indicators, Kopach curves, many things. Bollinger Bands. By the way, there's a Bollinger Band here. I forgot to mention that you can see here the shaded area. There's your upper Bollinger. There's your lower Bollinger. Right there, that shaded area. See the Bollinger Bands climbing? So that gives you also an idea about the range that the market can travel in. Generally, the lower and the upper Bollingers will coincide with the support and resistance levels. And that's important for you guys to know. It's real simple. On the next chart that I'm going to explain, the Bollingers are obviously more enhanced. You can see them clearly, but here you can see them too. But do subscribe to Quad. It's going to help you big time. So let's look at the internals. The first internal that we look at is this STOC 903. It's a fast stochastics. Okay, and basically, don't worry about the numbers. The SSTOC is the slow stochastics in quad, and this is the faster one. The faster one is going to move up and down rather quickly during the day because the markets are moving fast during the day. And it can get overbought like it did. It got overbought here. Look, overbought, and it pulled back a little bit. It pulled back a little bit. Very oversold at the end on the 29th. Very oversold. The fast stochastics got overbought, and there was a little pullback by the early part of the day. Little one, but still. Then it went into overbought zone and started to move sideways. That is the sign of strong relative strength, RS. And I mentioned that too a couple of times. So you look at this, if you want to do active intraday trading, then you should be looking at the fast stochastic of the upper column. You look at the slow stochastics, like I say, Mr. Slow Stow. When it gets this deep oversold, I don't care what is going on out there. There is a very high probability, 70 to 90% highest probability. Nothing is 100%. There's nothing guaranteed. But 70 to 90% probability that you are going to get a reflex bounce, sometimes known as a dead cat bounce. In a bear market, it's a dead cat bounce. In the case of a bull market, it's a reflex bounce or continuation rally. And that is exactly what happened. You can make these things up right there. And when the slow stows turn and the lines cross over each other, gentlemen, this is what happens. So let's say you didn't want to hold all the way up there, or you had to go away to CES or Vegas or whatever. I mean, okay? You can just trade this. The slow stows went from deep, deep oversold. Remember, this is deep oversold. Don't ask me to explain that, okay? It's all the way down here. You can see that. It's below 20, hitting 0 right there, okay? You got to buy something. And the reflex bounce is quick. Now, when I say quick, sometimes it takes a much longer time to go overbought again. Sometimes it takes, this happened within a day. Sometimes it takes a couple, 2 days. It doesn't take 5-6 days. These days, machines are running, not these days, for years now, machines are running the system. So things will happen within 24 to 48 hours. Or within a couple of hours, if it's moving really fast and the market's really strong. So this got overbought pretty much right away, but there was no indication whatsoever here of a crossover down. This is known as a crossover down. Once you see a crossover down, there's a pretty damn good probability chance that it's going to go and fall into the oversold zone again, even though along the way the market's not going down in a straight line. It's zigzagging around, throwing you out of your puts. But if you follow this and you stick with the trade, then you're reaching the promised land. And the promised land is fat dollars in your P&L on the short side in this particular case, because it's going from overbought to oversold. So in between, even if the prices zigzag around, it doesn't matter. You're not going to be a real committed buyer till you see this. You don't have to wait for the turn, but you start seeing it curving. It's not that hard. It requires patience, which we all lack, because we all want instant gratification. But you want to make the big money, you need some modicum or some exercise in mental patience, which will give you more money. Sometimes it's not going to go oversold. Sometimes it's going to go from here and then turn. But that's charts. That's why I track charts 24/7 on my 12 plus screens. So that's it. You slow stows. When it gets this deep oversold, you got to buy. Now, look what's happening with the slow stochastics right now. Regardless of the price fluctuations now, and what the so-called talking heads and the gurus keep on telling on TV, what your mind's telling you, what your buddies are telling you in other trading forums, what your own opinion is, means nothing. On individual stock, sure, it means something. You can, you want to educate yourself on a certain stock. Absolutely, there's nothing wrong with that. But if you want to educate yourself on the overall market direction, look what the slow stochastics are doing. It turned and it's still climbing higher. The crossover is intact. So the thing that you focus on is, number one, is the crossover intact? And secondly, majority of the time, I will draw a line here. What is this line? Just accidentally like fell off my cursor and just like, oh, boop, it's on my screen? No, it's telling you what the uptrend, whether it's a directional bias, is higher or lower. Sometimes I'll draw one like this. Oh, I already have it here. And I was right. It gets overbought. Chances are you're going to see a oversold condition soon. And this happened within 48 hours. In this particular case, the markets were extremely strong. So I had mentioned it too, that they're staying above and moving sideways. So you don't want to go heavy short at that point unless you see a crossover down. That's it. So now the crossover is still intact. So you want to stay long with that trade. Don't forget that between Thursday and Friday, S&P calls bought at 3, went to, it's still on my screen, $16. $16. When was the last time you bought a stock at 3? No, it actually went to 17.85. They closed at 2. Trent remembers. After hours, they were trading at 24. I mean, they were trading at from $2.40. They were trading at 3 plus. I sold a few there just in case. And on Friday, they went to 17.85. Now, these were the 2770 calls expiring on Friday with 1 day left. So I hear a lot of the times like, what about premium decay and blah, blah, blah. Well, yeah, that's why we're playing the lottos. And premium decay doesn't mean just because you have 1 day, you're not going to make money. It happened a lot of the time, especially in these type of markets where the institutional shorts are getting obliterated. It went from a close of roughly $3 to $18. That's 6 times more on your money. It's just 500% profit. They have to hold it all the way, but you could sell it in between 3 and 18 instead of panicking and selling when the slow stochastics are that deep oversold and turning. If you would just watch prices, you're done. You missed the whole trade. And a whole bunch of you did that. And some of you didn't. And some of you bought during the day because I alerted again because they didn't open at $18. It opened at $3.70. So you had ample opportunity to buy during the day. Now, did we think the market was going to go up that berserk on Friday? No. So I sold mine. I didn't sell mine. I won't lie to you. I didn't sell mine at $17.85, but I sold going higher, closer to it. Repeatedly, I did like 3 separate trades just in case it slipped, fell, and didn't pick up. But the charts were telling me they're going higher. Insanity is doing the same thing over and over again and expecting different results. It ain't happening. Majority of retail human traders are doing the same stupid price watching trades over and over again, not focusing on the charts, and they're not getting anywhere. Now stop doing that. Just stop doing that. Stop being insane. Kill your bad habits. The year 2018 is the year you decimate your bad habits. So, what more can I say? If you just followed these charts, the options went from 3 to 18. I didn't buy it at 3. I bought it at 2 plus cost average down, all kinds of good stuff. Sold some at 3 and sold most of them in the middle. The meat in the middle is what makes you the bucks. If you thought that you're going to sell exactly at 18, well, you can certainly do that. You can leave one in there. Let's say at 2 or 3 or 1. I mean 2. So leave one there to run with the wind. I don't know why. I mean, I never catch the exact top. Sometimes they get, lucky, like boom, and it's like exact top. Normally on gap up opens in markets, I do. And remember, machines run the options prices, so you can't be getting that exact thing. You just got to throw it in there to sell somewhere close to it. So I'm going to get off the chart. Look at the internals coming off, crossover up. That's known as a crossover up. That's a crossover down. Crossover down. On an uptrending market, this is what it looks like. The stochastics keep on moving sideways. However, the short-term stochastics, the intraday ones, will move back and forth. They'll go up, they'll go down, they'll go oversold, they'll go up. That's because these minor profit-taking programs dominate the market, right? Gap up opens, we've seen that. Nvidia, Netflix, boom, the sell program comes in. So first thing you do, you take your profits. Then you look to re-enter. Or if you have a bunch of those calls, then you sell most of them. Or you leave a little bit in there. I always say, always sell gap up opens. If it runs more, fine. At least you have your money in your pocket. Then you can re-enter. But at least you bank the money. Remember, money in your P&L is just a number on your screen. When you sell it, that's cash in your hands. Never forget that. Never forget that. It's a confidence booster. It's great for you to start your day, your week, looking at your P&L in a digital number, which can go from being up lots of dollars down to lots of losses, will happen consistently in these machine-driven algorithmic high-frequency trading algo HFT markets. It will happen every single day. And you guys have gone through it. Okay, so that's it. Pivot, support lines, look at the structures, look at the gap, very, very important. I have markers there on the gaps all the time. Breakout line. Don't worry about the volume. I don't look at the volume stuff I look at the volume on Thinkorswim. I don't look at it on the quad stuff. But it's right there. Fast stochastics for intraday day traders. You can trade off of these when you starts to get overbought. You can start taking your money off. Slow stochastics for swing traders primarily, looking good so far, and that's what the markets are showing. Let me get out of this screen. Okay, now let's take a look at the S&P charts. I just created this one right before I started. So this is the one you're going to be seeing, you guys will be seeing tomorrow. Big fat gap. Somebody who has no idea what they're looking at on the charts, they'll be like, oh my God, look at that. It looks so dangerous. Well, it ain't that dangerous because this was the gap just on since the 12th, which was Friday, right? Yep, 12th was Friday. So this is a very relevant chart. This was the gap on Friday. This was the low on Friday. This was the gap up during the long weekend. Okay, because yesterday was a full trading day. Today was a full trading day in the global markets. So anyway, so there's a gap here. This is a very short-term chart. It's a 5-minute chart. I'm not going to even explain this one. This is the difference between this and down here is 2 points. But you can clearly see what the markets are doing. This is a real-time chart right now, by the way. So there's your trading range, 5 points between now and when our markets open. 27.97, 27.90, 7 points. But that's not the chart I want to explain. I want to explain the one that has consistently made many of you, including our esteemed members here who are attending, money. Sometimes very big money, sometimes small money, and sometimes no money because you're not looking at the charts. Charts are not perfect, but trust me, they will give you a indication of things far better than if you're just trading prices. I will keep on repeating that over and over and over and over again until I'm sure a lot of you are saying, "Man, he keeps on talking about this tactical precision stuff." Well, it's a fact, real news. So when you look at this chart on investing.com, highly suggest everybody use this platform. It's free. Just put it in your email. I don't pay for this. I only pay for it so the ads are off, so the ads don't keep on popping up on the right-hand side. Um, so that's all. So you have a wide channel here that goes back not years, just goes back to 2018, beginning of January. Look at that, 2018, right there. That was your December 29th sell-off. Woo, the end of the world. This is also the this is actually, it says 1413. I consider it to be on the faster side of the stochastics because I'm still trying to figure out. It says 14.3. This should be actually the slow stochastics, but it actually moves a lot faster. And you can see that moving right now as the markets opened up 6.75 points handles, 6 handles on the S&P 500, and right now you're up 3.5. So look what it's doing. It is moving from here down to oversold. This is a 1-hour chart, which is good. So all said and done, the way you read the structure is very simple. You look at the green lines, which are the upper resistances, upper levels where the markets can go. You can look at the red lines as and the market's been breaking out. So the previous green line, which was the, remember, range breakout, new all-time highs that happened on Friday. So that has now become support. So we can go from 27. If we say, for example, wake up and something like, some news comes out of Europe or whatever, some negative news comes out, whatever, we can drop from 27.92, break through this channel, hit this dotted line, which is, remember, each of these lines are support levels. So at this point, and you can hit that 27.77, breaks down below that. You're going to test the 27.60 level, which was the first channel breakout. That's what this line is. The second channel breakout happened on Friday at 27.77. If we drop from 27.93 to 27.70, and these things you should just know in the back of your head, to 27.77, you're talking about 16 points. 16 times roughly 6 means the Dow is going to open down 100 points. All of you, most of you, I shouldn't say all of you, most of you are going to freak, like, oh my God, I'm upside down on that position, whatever. Fine. Nobody's saying you can't feel crappy. I feel crappy sometimes when my positions are down, like, because, the market just suddenly has a mini flash crash at 9:30 in the morning. Of course. But what you do after that to make that money up, and more importantly, your job is not to come even. Your job is to go well past that. That's where volatility, dollar cost averaging comes in. So you bought an option, let's say, for example, at 4, giving you the same example, and now it's at 1. Would you panic and sell everything at 1? If the charts are cooperating? No. You buy 3 times more. Maybe you buy 4 more at 1. So you bought, let's say, 4 here at 4. So you put $16 in, just giving a hypothetical example. You buy 4 more here at 1. So that's another $4 in. So your total money in that trade is 20 bucks. You had 4 options to start with. You got 4 options here. So that's 8. Okay. So what's your average cost right now? Your average cost right now is $2, $2.50. It's no longer 4. As the market pulls back, as the market pulls back, and then does this same old stuff, right? This type of dragon bullish type of formations, inverse head and shoulder. Like I said, I'm not getting into patterns tonight. Sign up for the advanced coaching sessions. I'll teach you everything. So as the market pulls back from the 2.5 and it moves higher, you're going to be selling those babies at 6. That's from 2.5 to 6 to 5 is 100% of your money to 6. And this happens all the time, is 140% on your money. So instead of losing your shirt from here to here because you're not following the charts, you can deploy those same calls that you bought at 4. You can buy them at 1. Follow the tactical charts, look at my alerts, and I'm always engaging with you guys on the chat room, giving you the feel of what's going on. Create a W formation. It's happened a zillion times. Watch the internals to see if they're really oversold. Now remember, I do all the hard work. I just want you guys to read the charts correctly. That's it. For your own benefit, not mine. Because again, I'll say it. I know some people don't like it. Whether you blow up and lose money or not really is not my concern. Because you don't care if I lose money. Because it's a capitalist world. You respect, but you're not going to give welfare. You're not going to help me. If I'm down, I'm broke. So the point is, in trading, it's a very independent business. We're not into the welfare society. We're into self-responsibility. And self-responsibility comes through what I'm teaching you guys right now on this intro webinar. So bottom line is you sell 140% instead of losing a shirt and losing 90% or 75%. So what do you look in this chart? I'm going to keep this short. You look at the channels. You look at the Bollingers. There's a lot of stuff going on here. You look at the lines. This is a very powerful support line. You don't want to go there if you're long and you're not shorting. If I see the channel break, I'm going to look for this level of, if I see this channel break, for example, it's okay. It can slip down a little bit more. But if it breaks the 2780 level or so, I'm going to short real fast, real quick, hard. Things happen fast because this ain't grandpa's market, all right? So by the time you're pondering and scratching, should I buy that put he just put out there under the alert? I'm already done with the trade probably. So for active traders, you got to act on it right away. You don't need to put a big time money in there. If you do, you're going to make a lot of money. You can put a small amount in there. You can buy one put at maybe $2 or $3 or $1.50. Before you blink your eye, within 15, 20 minutes, half an hour, they could be at $5. It's happened a lot. Same thing with the calls. When you see a breakout, you don't sit around scratching your head. I'm showing a bull flag here. And that bull flag went higher this weekend. This bull flag was drawn on Friday. I have shown multiple bull flags. And they've all broken out. So, there's a lot to learn. I'm still learning and adapting. But on this chart, you look. Main things you look at are these lines. Look at the channels. The dotted lines are also supports. Remember, they're coming off some big reference levels. They're not just randomly drawn, okay? Look at the internals. That's the fastest thing. If they're getting oversold, you want to be a buyer down at these levels. You want to be a seller up at these levels if you're an active trader. And you look at the general direction. The first thing, like your brain tells you when you look at this chart, is the market going higher or lower? And nobody can tell me that the first thing their brain says, this is still on an uptrend. And remember one thing about this. This is the upper half of the channel, or roughly whatever. And this is the lower half, right? We're still here. What if the market breaks up here? Then we're going to 2440, which I'm going to show you on Thinkorswim is where the market overall, I think, is going. Where we have a sizable confirmed top where we can do some nice swing short trades and just sit on them. Doesn't mean it's going to make you feel comfortable during the day when the market turns around, you're short and goes up 50 points. But generally speaking, the top on the channel is up here at that 2840 level or so. So saying all that, look what happened since January. The market was trading on the upper end of this channel, then the consolidation, and now we're trading on the lower end of this channel. There's a good chance that we get back into this upper portion of the channel. And do you don't want to be super excited and like euphoric and the euphoria stage is coming in. Read my comments on Twitter feed. Wave 5. This is wave 5. A little too much excitement, which is fine. But that's when the sell-off comes. And it comes fast. Can happen overnight, can start happening during the day. Most of them happen overnight, which is the worst because if you're heavily long and you're looking at the charts, you wake up in the morning, you're like mentally shot. So that's your S&P 500. Arrows are put in place. What more can I say? As to where the buy levels can be, and I'm going to put one more, which is here, right there. Okay, so use those markers too. Nothing more to say. Let's look at the NASDAQ. This is your NASDAQ chart. This is a 15-minute chart. You're zooming in more. Remember, I'd drawn this megaphone pattern. Well, go take a look at it. Look what the markets did. It blew well past the megaphone, and now it's going to come and retest the megaphone. There was your megaphone pattern drawn on the 9th. What day was the 9th? Was last Tuesday. The patterns on the NASDAQ futures, which includes biotechs and tech stocks that we trade, far more random. I took a lot of time and energy, and I created this chart. Even put big time. Who needs, people go and pay $4,000-5,000 to TradeStation or Online Trading Academy or whatever those names are out there to learn this stuff, and they don't even teach you the way I do. And you're paying $4,000-6,000 for those courses, if not $10,000-20,000 for more advanced courses. Okay? Here you can just look at this frigging chart and just look at the title and the technical. What do you call technical pattern markers that I'm putting out there, and just learn from there. That's $2,000 right there. You should pay me right now for this chart. Seriously. So these are volatility clusters. More importantly, you should be looking at long tail hammer reversals. Long tail hammer reversals, exactly what they show. A long tail and a hammer. You see a long tail hammer reversal, you want to be in there. This was a minor long tail hammer reversal. This is a major long tail hammer reversal. You can see them. I put the arrows there. They should just blast up where the shorts get killed on Friday. And guess what it did? It blew through that megaphone pattern. And the megaphone pattern is just going to take it the way I draw it. That's it. I'm not here to explain what an exact megaphone pattern is. It's more of a complex structure. Okay? Because an average person looking at this chart says, oh my God, we're really going to come down all the way down here. Instead, it was a downtrend line drawn from the previous high, and it hit exactly that, slipped below that, took the stops out, took the retail guys out, took a bunch of institutional guys out, turned around, and decided to go higher. And one way or the other, through intraday volatility that many of you are so, even to this day, scared of, it hit exactly where it was supposed to go, which is the upper end of the megaphone, blew through it, went up, hit my other line here, and now doing this. And that's your NASDAQ. So what do you look for when you look at a chart like the NASDAQ? Now, we don't trade the NASDAQ, actual NASDAQ options. We trade the QQQ, the ETF, options on those, or the QQQ. But the reason I put this out there is that, and I've said this many times, people are trading the Googles, the Apples, the Netflixes, all the big name tech stocks primarily, should be keeping an eye on this when I'm posting it, because I'm not going to randomly post it every 10 minutes. Obviously, I'm just going to post it when there is a change in there you guys should be aware of. But if you just type in this same symbol, investing.com, put your email in there, have it on your site too, so you can pull it up, have it open in a tab. Because if this is breaking down, okay, and we have had multiple of these mini flash crashes, you notice how the structure of this chart is very different than the S&P 500 because they're a lot more volatile. So if this is breaking down, you can't be just sitting there saying, oh, I want Apple to go higher. I want Google to turn around. No. You're not in kindergarten here, guys. All right, girls? So if you track this chart, you can see there's a pattern. So we could do this. We could do this. And then right there, when you panic, it's going to be the buying signal because it's going to do this. Just the way it did this here. Okay? So on this one, just follow the lines, just follow the lines. Here's your breakout level. Here's your second breakout level. I'm going to draw another line here when I put this chart up again tomorrow, which is your, one of the first support levels. This is a major support level. So whichever the case, this chart is equally important to the S&P 500 for tech traders. So if you're starting to see a big sell-off program coming in, all of a sudden they're all dropping together, you want to take a quick look at the NASDAQ 100 futures when I post it, or yourself on your own side, to see if you're starting to see if there's an ugly red candle. I can assure you, it doesn't matter how much you plead, how much you grab your adult diapers, it's not going to turn around that fast. It's going to go straight down here. In between, it's going to zigzag around, a little bit, throw you up, but you want to stay short. This is what a regular chart looks like. Well, obviously, okay, without any structure. So this minor red candles that you're starting to see, that's still a bull flag. So the last chart that I'm going to show you tonight is the S&P 500 weekly, and I am going to look for it. So bear with me 1 second. Bingo. So this is your daily chart. I'm going to show you the weekly chart. And I drew this line because it coincides with the upper end of this very defined channel that started back on September of 2016, right before the elections. This big reversal hammer, that's what a real weekly reversal hammer looks like, was the presidential win of my New York buddy, Mr. Donald Trump, who was to watch his Twitter. Just kidding. And the beginning of this monster rally. So I drew these channels very clear, and believe me, they are going to be, exactly what I'm saying. The mark, what's going to happen, and you can see that the upper end of it is 2839. Read my Twitter feed, so I don't have to read a little storybook to you guys. I put it out there where the Dow might go, based on the fact that the upper end of the channel is 2840 or so on the S&P. On the E-mini futures, this is where we are right now, uptrending beautifully. Look at the internals, just moving up nicely, no signs of any letdown yet. This is the type of movement on a weekly chart that you want to stay short for a bunch of days. And this minor thing that looks small on the weekly was a big drop. That was a 400-point correction on the market. Just the way it happened here back in October of 2016, before the elections, 5 days of incessant selling. And you can see here what's going on with the weekly right now, which is not showing any signs of technical weakness, which if I see any change, you'll be the first one to, let you guys know. But we are getting towards the upper end of the range. This is your weekly chart. There's your major 2700 is a major resistance. If we drop to 2700, which in my opinion we will, that's roughly 90 points on the from here to here. Well, let's say, from here to where we are to here, for real traders and investors, that's roughly 90 points. I'm taking a round number, 90 points. That's 540 points in the Dow. It's going to feel like the world is falling apart. And all the market's going to do is retest this climactic breakout on the weekly that was generated on the week of January, beginning of the year, week of January 3rd, 2nd. That was the big fat breakout. And that will be retested. And that's a 540 point move on the Dow. You're going to see like these stocks down big. Amazon down 30, Apple down 10, Google down 30, Priceline down 50. Okay? JP Morgan down 3, Goldman down 6. All because the market will retest that breakout of 2700 that occurred on the 3rd of January. 2nd and 3rd of January of this year. And it will happen, guys. But everything is here. If we break that, the next level of support, and by the way, that's just simply a retest. It doesn't change the trend in the market. And this breakout level here, which I've highlighted at 25.95, that's another 100 points down. That's another 600 points on the Dow. 500 to 600 points on the Dow. It's going to be like Armageddon, like, oh my God, what's going on? This is it. It's over. The Trump rally, the U.S. economic growth. Nothing. Because as long as these lines, the 50, the 34, the 20 week moving average, continue their trajectory higher, or their, you can just look at it yourself on your screens. If they keep on continuing going this, trending higher, then these retests will be nothing but big buying opportunities. And I can assure you that we will short the market hard based on not the weekly, on the 1 hour and the daily. And I hope you guys are there with us to enjoy it. It doesn't change my bull thesis. My bull thesis will change on the market if we convincingly break 2600. Then the bull market for now is over. And 2600 from where we are right now is 200 points, which is roughly 1,000 points on the Dow. Right there. 2600. If that breaks, you're going to see a free fall. There's going to be panic selling. And my tactical charts will show you the way. The daily. The daily is still trending higher. Look at these are the full stochastics here. It says full stochastics. I don't change any parameters or anything. Still looking fantastic. There's nothing to it. Look at that. So it's not your opinions and what you think or what prices you're watching or whether you think Google's going to go there and there. It's what the charts are showing. And the charts right now on the upper end of this channel is showing us, we're close to 2,800 on the daily, which I believe we reached this weekend pre-market, by the way. So we're on a short-term basis, we're topping at this point, okay? So we got to be careful about the way we handle our profits. I know I will be, and I'm going to keep on helping you guys with that. And if you guys choose to make money and not blow up your account over and over again, then you better be focusing on what I'm putting out there, better be signing up for the advanced coaching sessions, and stop just trading prices. That's the best piece of suggestion, not advice that I can give you. Remember, advice comes from yourself. And if you keep on giving yourself bad advice, terrible. Keep in mind that I would say a good 80 to 90% of retail traders have not made any money of any significance or actually lost money of great significance in this whole bull market. And that's a fact. So on that note, guys, have a great evening. Look forward to seeing you guys tomorrow. It will be a fantastic week. Long, short, sideways, I don't care. Long and short. Uh, Pass on the good word on Clue to Say Trading out there. I love the shout outs that Trent and many others uh, uh, get give my service on different trading forums. I truly appreciate that. I want everyone else who would like to do that, would like to grow our service to a much larger degree, and whichever the case, this is where it happens. Have a great evening. God bless you all.